They silenced us in school, punished us for asking, why? But I am not here to stay silent. I am Justin, just in for justice. This is Nyay Uncut. Let's trigger thought. Title: GST 2.0 in India. Burden or relief? One Nation, One Tax explained, Nyay Uncut. India launched GST in July 2017, promising One Nation, One Tax to simplify a confusing web of levies like excise duty, service tax, value-added tax. Octroi equal to entry tax on goods brought into a local area, commonly called octroi. It was a local tax levied by municipal authorities on goods entering their jurisdiction, now abolished in most of India after GST introduction and entry tax. But 7 years later, many Indians still wonder, why does GST feel more like a burden than a reform? Is GST 2.0 the fix we truly need? Part 1. What was GST 1.0? The first GST system introduced 4 main slabs: 5%, 12%, 18%, and 28%. To break it down, CGST goes to the center, SGST to the states, and IGST applies to interstate sales, all of which businesses must carefully track. Monthly compliance required filing 3 different returns plus 1 annual return. Key goods like petrol, diesel, and alcohol were left outside GST, adding to confusion. To keep states happy, the center promised compensation for any revenue loss. On paper, GST simplified dozens of taxes into one. In reality, it created a maze of slabs, additional cess, and complex paperwork. Small shopkeepers struggled with compliance, big corporations found loopholes, and consumers kept paying seemingly high rates. Part 2. What is GST 2.0? Now, the government is working on GST 2.0, aiming to rebuild the system into something simpler and fairer. Key proposed features include fewer slabs. Instead of 4 major slabs, there may be just 2 or 3, for example, 8% for essentials, 16 to 18% for standard goods, and a higher slab for luxury and sin items. Bringing fuel under GST, petrol and diesel might finally be included, ending double taxation. Simplified compliance, a single return filing system could replace multiple monthly forms. Technology-driven improvements, AI-based invoice matching, real-time tax tracking, and less paperwork. Stronger state role, more autonomy in revenue sharing to reduce center-state conflicts. In short, GST 2.0 promises one nation, one market, one tax, not just in theory, but in practice. Part 3. Why is the government bringing GST 2.0? There are 3 big reasons. 1. Economic growth. Complex taxes scare away small businesses and foreign investors. A simpler GST can boost ease of doing business. 2. Revenue stability. The old GST needed a compensation cess to keep states happy. GST 2.0 aims for a balanced system without temporary fixes. 3. Public pressure. Many feel GST increased their costs rather than lowering them. The government wants GST 2.0 to reduce the tax burden and prices. Part 4. The deeper truth. But the big question is, will GST 2.0 actually reduce our bills, or will it just look better on paper? If fuel enters GST, states risk losing significant tax income. Will they really agree to that? If slabs are reduced, some products might move to higher tax rates, which could hurt the middle class. Simplified compliance may help, but will small shopkeepers finally get relief or remain overwhelmed by digital paperwork? For GST 2.0 to succeed, it must do 2 things: make essentials genuinely cheaper, reduce compliance stress for small businesses. If not, it risks being just another headline reform, more about politics than people. GST 1.0 promised one nation, one tax, but gave us one nation, many slabs. Now, GST 2.0 promises correction. But unless it lightens the load on common people, the slogan will stay the same: one nation, more burden.